Now, let's talk about the role of internal loss data as a part of the operational risk framework. On a broader note, whenever we talk about the operational risk framework, we are bringing in a culture and awareness regarding the operations risk across the organization, different kinds of policies and procedures set, right? This is what we are calling as a framework. Proper governance of the company in place across the whole framework. We need to have the proper governance structure, and all this need to be guided based on the risk appetite of the firm. Now, once these things are in place, we talk about the four core elements. Four core elements in any operation risk framework. One is the loss data. So here we bring in the internal loss data as well as the external loss data. So the loss data is one of the core elements in the framework. Along with that, we talk about risk and control, self-assessment, which we actually call it as RCSA. So risk and control self-assessment is one more core process. Then we talk about scenario analysis, looking at different kinds of scenarios, etc. And finally, coming out with KRIs, key risk indicators associated with the operation risk. And once we have these four key elements, which are called as the core elements, across this four core elements, we need to have a much better measurement mechanisms as well as modeling mechanisms. I should be able to model internal loss, external loss kind of data, and finally it's the reporting. So this is what we actually call as a good framework for operational risk management, which means one of the core elements in this framework is the loss data, and what we are talking of here is the internal loss data. So, we'll look at something into this internal loss data, and whenever we are talking about loss data, so it is just not the loss, because the better way to define this is it's an operational risk event, not just the loss. It may cause a loss, it may not cause a loss, right? And typically, whenever we are talking internal is something that has happened in the firm or to the firm. And external is something that did not happen, the loss that did not happen in the firm, but it happened in the industry. So, if I really collect this data, it's a key, it provides me a kind of an insight. Whenever I am collecting the data, it provides me an insight into the current exposure of the firm, right? To what extent the firm is exposed to operations risk. And unless I know how to measure it, I don't know how to manage it, right? So the better I collect it, the better I can measure it, and then the appreciation of the importance of the management of operations risk comes into picture. So once I collect it, I would be able to measure and manage it, And in some cases now it is becoming more and more mandatory because of the regulatory requirements that are coming up from regulatory bodies or from the agencies like Basel II. So whenever we are talking about, now that we know that we are clear regarding the collection of the data, now all that I really need to know is who should collect the data, what should be collected as a part of the data, where it should be collected, when it should be collected, and why it should be collected. So first of all, if I have to try to address why the data needs to be collected, there are various purposes companies can talk about. Now, I want to collect the data to create a capital model for capital modeling purpose. Or I'll say I want to create the data to help identify the weaknesses in my process so that I can very much correct them. Or someone else might have an objective that yes, I'll start off risk mitigation activities, right, so that I can reduce that particular risk. So for that I need to collect what kinds of risks, how much of data is available. I want to understand current exposure to the organization, how much of exposure I have towards operations risk. Right, if there is any excessive risk towards any particular segment, I really want to know. Or probably put an operational risk discipline in the company in place altogether. So different kinds of objectives could be there for any company in terms of implementation of the operation risk or in terms of collection of the data. So depending on the purpose, the design could differ. But whenever we are saying I have collected an effective loss data, it should target a specific purpose. It can't be generic. It should reflect the culture of the firm. Strong training should go across the firm in terms of explaining why this data needs to be collected. So, when we start collecting the data, what typically happens is the quality of our database, right? Quality of the database probably in initial years may not be that great because I may not be able to capture all the elements, all the disciplines with precision. So we are talking about it will take significant amount of time for different kinds of operational risk to be captured to meet our requirement. But still that culture of capturing the data needs to be very much embedded into the system. Then moving on to who should collect the data. There should be a clear-cut responsibility that is assigned. Probably one member from each department is very much need to be assigned for the process. So there should be a policy that should clearly define the roles and responsibilities of the representative who will be responsible for collecting all the operational loss events that are pertaining to that particular department. And so in some cases, probably some events which were not recognized in one particular department can also be recognized as a part of the typical audit process or typical reconciliation process. They could be identified by finance or any other department when they were not identified as a part of the earlier process. And even those need to be captured. So basically all kinds of day-to-day activities where there is a possibility of loss that can occur because of the operations activities, the moment you see it, you report it, right? To make sure the responsibility is given in such a way that you can ensure that the event is not remaining unreported. But here comes the biggest difficulty. The moment you say, I'm capturing the operational risk data. Don't call it as loss data. Probably if you call it operation risk data and you say, I'm collecting the operation risk data of the various events, make sure that you are not associating the reporting with fault finding of the individual. Right? They should not start feeling that more and more loss data is collected to typically find fault with my process. But you have to very clearly take the message into the organization that this is for effective organizational risk management framework. So probably if there is an open database where anyone can enter any kind of a defect or operational risk event, it is much more promoting the risk culture across the organization. So regarding who has to collect, as we said, there should be a responsibility so that the person will take the onus in terms of collecting all the events that are associated with his particular department. Then what? What should be collected as a part of the loss data? So for that, there is a very clear definition which says any event where which is meeting the firm's definition of operations risk. Probably there is a help that you can take from Basel 2. There are broad categories of risk which Basel 2 has already provided. But that any event that has typically occurred, you assign it to one appropriate risk category. Don't assign it to 100 categories. So because you can't boil it down and the solution can't come down better. So to understand these risk categories, they are the ones that are typically provided by Basel 2, and the experience is the categories that they have provided are fairly comprehensive in nature. So at the highest level, they talked about 7 categories. So what you can very well do is any risk event, you can map it to one of those 7 categories at the highest level, and then at the lower levels do the customization, better matching the culture of the firm and the products that are getting designed. So just to understand now the different kinds of risk event categories which are defined by Basel 2. Broadly, 1. They talked about internal fraud. Let me just list them and after that we'll go one by one. So there is an internal fraud, there is an external fraud, then we are talking about employment practices. The losses could come because of employment practices and workplace safety. So there is another category of operational risk data that we are talking of. So the losses that the company is facing because of the clients, products, this is another category, the business practices. Because of this, the company is facing a loss. Or we are talking about the loss that can come to the company because of damage to the physical assets of the company. Or we are talking about business disruption. We'll see what all goes into each of them. So this is one more category, business disruption and system failure. And finally, the 7th one is something to do with execution of the business, the delivery, process management. So these are the 7 categories which Basel has actually defined. Now, if I quickly go through each one of them, let me start with internal fraud. So, here any kind of action that is intended, right? Whenever we are talking about internal fraud, any activity or any event that is an intentional wrong behavior of an employee that happened inside the firm, that is what we are calling as the internal fraud by involving an employee inside the firm. Now this is where the subcategorization happened in terms of understanding the unauthorized activities. Any unauthorized activity that has been performed, like the transactions done but not reported, right? Though you are unauthorized for a particular type of transaction, you have gone ahead and implemented it. The positions have been wrongly marked and it is an intentional wrong behavior. Or there is some kind of theft and fraud that is done inside the company. So it could be a kind of insider trading, unauthorized trading. There could be some kind of fraud, misappropriation of assets, forgery, smuggling, bribes. All these things, they come under the internal fraud. So all this data regarding this internal fraud needs to be captured by the company. Similarly, when we are talking about external fraud, the next category. So this is the fraud. There is a fraud, but there is no collusion, right? No collusion with the internal employer of the company. So here also there is a theft that is coming up, robbery being done by someone else, robbing of the firm's assets, forgery, but not involving someone internal. Or they could come under the category of systems security. Now, this is a very serious issue because today cyber attacks are one of the dangerous attacks that are existing in the industry. Lot of hacking activities. They all needs to be reported as a part of external fraud. Any theft of information is getting categorized as the external fraud category. So most of the high profile operation risk actually fall into this category. Cyber category is a very dangerous loss category that the world has witnessed in the past few years. The volume, the sophistication and effectiveness of the cyber attacks has increased drastically. Probably we are even calling it as cyber terrorism today, right? So all these will go as a part of the external fraud activity. So we should be able to capture the external fraud data. Then moving on to employment practices and workplace safety. This is one more category where the operation risk can come into picture. So the losses that are coming because of the harm that is suffered to the employees, the harm that is done to the employees because of, probably you can call it workplace accident, right? Different kinds of accidents that happen because of the non-safety measures that are present at the workplace. Or I can bring in even the ill treatment or probably mistreatment of the employees. Employees discriminated. So such kind of ill treatment that are being shown to the employees. So that's the reason on a broad level we are talking about three major categories. One being the employee relations, right? Anything where the employee relations get affected, they have to be captured under this employee practices and workplace safety. So it could be issues with respect to compensation, there could be issues with respect to wages, salaries, benefits, termination related issues. All these things go as a part of employee relations and needs to be captured. Then looking at the safe environment which is provided at the workplace. How safe is the work environment? So we are looking at the employee health and safety kind of concerns here, workers compensation in case there is some kind of accident that can happen. And the third thing is more and more talking about the discrimination that could exist within the organization, all kinds, race, creed, caste. So discrimination on various grounds. So all these are typically captured as a part of operational risk events which go under the employee practices and workplace safety. Now, if you look at all of these, they are highly sensitive. Not everyone should handle them. So, generally, this particular set of events data, the capturing is done by the human resources department of the company. They are the ones who are entering this data, who have to enter this data into the database. And but one thing, generally the activities that are relating to the discrimination, you don't the company will not publicize them. Generally they are more and more confidential in nature, and because of that we really have to be cautious that the data that is captured may not be to the fullest. So there could be a lot of toned down version that comes as a part of the data capture under this heading. But yeah, just to give you a broad flavor, these are the things that go as a part of the employment practices and workplace safety. Then looking at the fourth dimension of BASIL, the headings associated with clients, products and business practices. Any losses that are coming because of these things. And just as a few important insights into it, some of the largest events where the severity is very, very high, they come generally under this category. Because heavy legal losses come here. We are talking about multiple kinds of activities that are coming into this heading. One, we are talking about the suitability, disclosure, any kind of fiduciary breaches, guidelines violations, right? Or probably privacy breaching, aggressive sales, misuse of confidential information. All these things are coming under this particular category. Or even I can talk about improper business or market practices. This is a very serious area. The practices improper, probably coming under antitrust, or we can talk about manipulating the market, insider trading, money laundering, lot of these things which are coming under the improper business practices, or even product related. If I talk about the product flaws, the defects that are there in the product, the model errors, all these come under the same category, right? Or we could even talk about with respect to advisory activities, dispute over the performance of the advisory activities, or even failure to investigate. Any investigation you initiated, as per the guidelines, if there is a failure to investigate, all these things come under the client's products business practices. One of the largest and highly severe events come under is because there is a lot that is associated with legal losses here. Improper business practices, suitability, disclosure. There are heavy number of legal losses that are coming in. So it could go right from the model error kind of a category to money laundering kind of categories, which are right from which are having a very heavy impact on the reputation of the firm as well. Criminal activity is also captured as a part of this category. Regulatory breaches are captured as a part of this category. So there is a lot to do with the legal events in this. So there is a lot of reputational impact as well as the financial costs. And probably there could be a negative press coverage if any of these things come up. So from an external perspective, this event gets reported to the highest to the external press as well. So better capture this kind of a data to get a much better understanding of the business processes. Then comes the next, which is the damage that occurs to the physical assets of the company. Here, probably the category is a very simple category. Any damage that is occurring to the physical assets of the company because of the disasters or any other event. Broadly, it looks at the natural disasters. So any physical property getting damaged because of the natural disasters, or probably any kind of human losses because of external things like terrorism, etc. So they are the ones that are typically getting treated under this category. And what you could see is under this category, there is a lot that is covered by typical insurance policy. But still, I should capture the event because it generally takes more than a year to typically get the settlement from the insurance company, and the company definitely requires enough capital to cover the loss during this period. So we need to have a proper mechanism in place which captures, measures and manages this kind of data also. Then comes the next category, which is the business disruption and system failures. Another broad category, the sixth one as per Basel. So here the broad area is systems related. The business getting disrupted because of systems. It could be because of hardware or software or telecommunications or even any kind of utility outages or any other disruption that are coming because of the system. I can't put a value on the losses here, but to a large extent it comes as the lost opportunities. Right? I would not be able to pick up a particular assignment, or I would lose out on one of the projects because of some kind of networking issues. So may or may not be a direct cost. And the losses here are very challenging because I cannot assign them to one single business line. They might be completely firm-wide kind of losses. But I have to allot it to some kind of a business line. So that is where some kind of ambiguity and challenge comes into picture. And in some cases, there could be an overlap. Probably if you are looking at extreme weather, it could cause multiple. It could even disrupt your networks, or it could do a physical damage. So the event, I have to capture it much effectively because one cause can have multiple operational risk events that can be triggered. Then I'm also looking at the last category, which is more to do with execution, delivery and process management. And one thing, let me tell you here, this is the category of Basel where the frequency of the events is higher. Almost every small event comes into this category. The severity is very low in this category because we are talking about any error that is coming because of the transaction capture, execution, maintenance, monitoring, reporting, documentation, vendors, suppliers, all these things, they are coming as a part of the execution, delivery and process management. So anything that goes wrong somewhere in the process, whether it is executing a trade, some kind of operational issue coming up, getting ahead with a client, onboarding a client, some issue coming up, creating a report, some kind of issue coming up, dealing with the third parties, some kind of issue coming up. Many of them may not be significantly high in value, but they still need to be reported. So things relating to miscommunication, data entry, maintenance, uh, delay in the project, failure in the delivery, right? Or any delay in the reporting, even to the client or internal, some kind of issues with respect to outsourcing, the disputes with respect to vendors, all these things are unapproved accesses that are given to different accounts, client records not proper, inappropriate, all these things, minor, less severe events are getting captured as a part of the execution, delivery and process management. So on the broad scale, we talk about these 7 categories that have been specified by Basel for capturing the various operational risk event data. So now that we are aware of the 7 broad categories of Basel, why should we use this kind of a categorization? One, if it is a Basel, the firm is following the Basel regulations, implementing the Basel regulations, it can help for reporting the operational risk events. So it can meet the Basel regulations. But at the same time, nowadays, because of the robustness that is present in this categorization, even for risk control self-assessment, companies are using the same kind of categorization. Even for identifying or coming up with key risk indicators or aligning their activities with key risk indicators, or even with scenario analysis, today we are seeing companies are using this kind of categorizations. They are aligning any risk KRIs and scenario analysis work also with a similar kind of categorization. Now, we can very well appreciate for a Basel firm, right? If I'm talking about a Basel firm, probably doing this categorization in this manner is very much mandatory for capital calculation and any kind of loss data capture. So they have to do it under these categories so that they can do an effective capital calculation. And the Basel clearly suggests that you capture a risk event, not the cause of the event. Very, very important point. So I have to be very clear about the difference between the risk impact and the cause. And the reason behind using these Basel categories are they are very, very helpful buckets. There has been a lot of research that has gone in, very good categorization. It really helps me gathering the various operational risk event data in a much more meaningful manner. But if any other such kind of categorization I am using, it's better that I try to map them behind the scenes to the basal categories itself. That's a good framework for me to go ahead. Now comes the most tricky question. What are the standards with respect to what data needs to be captured? Right? Do I need to capture each and every step? So I need to have some kind of organization level policy and standard in place which talks about what should be captured and what need not be captured. Logically speaking, probably I want everything to be captured, but there is an operational issue even there. So what should be captured and what need not be captured, there should be some level of standards that could be existing within the organization. So a few important points on these lines. Whatever the loss data program of the company, it should be more and more comprehensive in nature. Means it should collect all the material activities and exposures, probably across the different subsystems, geographies. So it is not limited to one single geography or one single business unit. Of course, it's difficult, but the operational risk management department should regularly review if the firm has done any kind of acquisitions. Make sure that this framework is applicable even to the new acquired or merged kind of firm or any kind of business changes that have come within the firm. So overall, it has to ensure that the loss data program is more and more comprehensive. Much more important, have I defined the threshold? What losses need to be captured? What is the minimum loss amount that needs to be captured? Because sometimes just a $1 loss that came out, do I need to capture this or not? Or sometimes I can say simple pencil is stolen from the store. Do I need to capture it or not? So there needs to be a minimum threshold above which each and every loss need to be reported. So the organization has to define this kind of a threshold, and probably it should be purely based on the risk appetite of the company. And if there are any kind of regulatory requirements, even those regulatory also will drive this. But just as a suggestion, Basel 2 suggests that you can use 10,000 euros as the minimum threshold, but the companies are following anywhere between 0 to $100,000. But towards mostly nowadays, they are more and more towards the downside, approaching the zero, trying to capture almost all the risk possible events. There could be a zero threshold also, but it will create a high burden in terms of capturing each and every event. Right? Even a pencil stolen needs to be captured. But yeah, generally this kind of a policy is being kept where it is possible to collect the data. Probably system is already designed to capture these kind of data automatically. There I can create, because it's not an additional effort capturing the error data. Wherever the system is able to log the stuff, I can still calculate and I can still capture even a zero risk tolerance kind of a data. But again, it is not the amount that I have to capture. Whenever I am capturing one loss data, there are a lot of other headings that come to it. Now, I can't keep capturing each and everything because it is going to create a much heavier burden for me. So even though the company is having a zero threshold for the operation risk event reporting, the full details of it may not be captured for all the events. So full details may be captured only for those events which have a certain threshold, probably $10,000 or some such kind of a number. And here we can even talk about different departments having different thresholds also. but at least there should be a minimum corporate threshold above which each and every activity at the company level would be captured into the loss database. So one, it should be comprehensive. One, I should be able to define the threshold for it. Then I should also be comfortable in defining what is the amount of loss, right? So I should define both the gross loss as well as the net loss. And if there was any kind of recoveries or something, even those have to be identified clearly. Now, this is where, what is the way to measure the loss? Right? When I'm talking about the gross loss, we are talking about two different ways of measuring. One, it could be a mark to market loss, or the other, it could be a replacement cost. These are the two measures for measuring the gross loss. So it's a kind of a loss, or if I'm going with mark to market, it's a kind of loss or adjustment where I'm looking at the comprehensive statement of income, comprehensive income statement. I am directly getting the gains or losses that are losses or any kind of adjustments that are coming up from the comprehensive income statement. Whereas when I am using the replacement cost, I am talking of cost to replace an item or restore it to its previous condition, whatever is the cost that is incurred. So it depends on what is the procedure I am using to capture the gross loss. Now the most important element is, when I am computing the gross loss, what to include and what to exclude. When I am computing the gross loss, there is an important section which talks about what to include and what to exclude. Any direct charge, you directly include, right? Or any kind of costs that are incurred as a consequence to that. When I am saying consequence to that, it could be a legal expense, it could be cost of repair to restore it to the original position. So all these things are the typical costs that can be included as a part of the gross loss. Any provisions that you are setting aside, like reserves, which is reflected in the comprehensive income statement, and finally any other pending losses. So any further loss that can come out because of the current event. All these I can include as a part of the gross loss computation. Whereas I should not include costs of general maintenance, which I am doing annual maintenance. So that cost should not come. Whatever the things I am doing with property, plant, equipment, any kind of contracts that are there, annual maintenance contracts and all, that cost should not go as a part of gross loss. Any kind of insurance premiums that I am paying towards the protection of any of these assets, they don't go under the gross loss. And any such kind, let's say the event has occurred and any kind of internal or external expenditure that I am incurring to enhance the business after this loss event, I am doing some kind of upgradation to the business, or I am doing some kind of improvements, or probably I am doing some risk initiation activities, risk assessment initiatives and all I am implementing, but I can't call all those things as typically losses, and I can't add up those costs also as a part of my loss amount. Only the direct losses, consequences, cost of consequences, provisions and pending losses are the ones that I have to capture as a part of the amount. So the capturing the amount is a very important activity in this loss data collection. And the next important element that goes here is the capture of gains, near misses, means it did not result in a loss for me, but it might have, or some kind of opportunity cost. There was no loss, but I have lost. There was no revenue as well. I have missed the opportunity to generate a revenue. Even that is a loss for me. So all these things also need to be captured. When I talk about the near miss, it's a kind of a valuable opportunity to manage the opportunity operational risk proactively. So the loss is very much under the threshold here, or no loss. Loss is below the threshold, or there is no loss. But probably I have identified a kind of a risk which was not mitigated, which I get an opportunity to mitigate now. Right? Probably when I talk about the opportunity cost, there was no direct loss. Let's say the trading system has failed. I did not make any trade in a day, though there was no cost. But still, if I had made a trading, I would have gained the revenue for the day. So I did not gain the revenue for that particular day. That is, even those kind of data are better to be captured as a part of our operational risk database. So all the near miss events, operational risk gain events, and opportunity cost losses, or the lost revenues because of the opportunities lost, even all these things, they need to be very clearly highlighted in the operational risk database. Then if at all some kind of recoveries are there, okay, loss amount is fine, but if at all there was a recovery, I should include the recoveries against that gross loss amount that I have typically got. Then the date of loss is a very important activity, the date of the event. But there is a lot of ambiguity regarding what date needs to be put. Should it be the date where the first control failing has occurred? Or should it be the date when the loss really came to the account? Or should it be the date when it was detected? What date? It's a very big challenge to understand what should be the date that should be captured into the system. And apart from these, even the description of that loss event is a very important. The driver, the causes. So that will really help us in terms of assessing the risk more and more appropriately. Now here things have to be made clear what has to be written in the description and what should not be, because it should not be targeted towards blaming any particular person, blaming for the wrong deed, but it should typically focus on the activity where things can improve. So there should be good training that needs to be provided in terms of writing good description without pinpointing any kind of a mistake towards any one single person. So here, when we are talking about the causes, it could be external. Broadly, if you are looking at, the cause could be purely external, or it could be because of the people, or people related, employees, staff, management, etc. Or it could be because of the governance activities, processes, oversight, right? It could be because of the different kinds of processes, or it could be because of the systems related failures. But whatever is the cause, try identifying the different causes and maintain an appropriate description. Now, along with that, there should be allocation. Now that we have described the loss event, now we have to do an allocation. If it is something direct to a business line, you can do a business line allocation. Now again, Basel has defined the mapping to the business line. So it has, you know that it has classified broadly into 8 business lines. So we talk about the corporate finance, right? The typical 8 business lines of Basel. We talk about corporate finance, trading and sales, retail banking. We have commercial banking. We talk about payment and settlement, agency services, asset management, and retail brokerage. So these are the 8 categories or 8 different line categories which Basel has defined. So you can map different loss data to each of these different categories or business line. But in some cases, some of them are more and more central to the entire organization. Then a process may have to be designed in terms of how the allocation can be made to each of these business lines and categories. So this is one more element that needs to be captured. And the action items. Once this entire loss data has been captured, we are focusing even on the action item. Because what is that mitigation plan associated with them? How do we recover if at all something needs to be recovered? All these things should go as a part of your operational loss database capture. Every loss data that we are capturing, all these elements should go as a part of that capture. Right? So this entire thing talks about what to be captured. Then comes where to be captured, or where should the loss data capture happen. Today technology is playing a very important role. Earlier it was simple spreadsheets, but today every company is having a very sophisticated system in-house or probably purchased, whatever it is. There are sophisticated systems which are handling multiple data standards, or even they are looking at complex workflow processes but trying to capture the entire data. So sometimes they are standalone, even sometimes they are integrated with the RCSA systems, with the KRI systems, with the scenario analysis systems, capital calculation systems. So the loss data, the technology that the companies are using is varying right from a very primitive level to a very sophisticated level of technology. So where to capture today is more and more dominated by the technology itself. And when I talk about when to capture as one more event, when, probably we all know, most and more effectiveness comes when there is a prompt and accurate reporting. So timely reporting of the event is very, very important to take an appropriate action. Otherwise, probably after all the damage has been done, if I start reporting an event, then there is no point in terms of doing any kind of mitigation or a control activity. So we have to be as prompt as possible in terms of collecting the data. So that is how this entire internal loss data process goes. Now just to summarize the entire topic that we have taken up. When we talk about the internal loss data collection, it might be required either for regulatory purpose, right? It's mandatory as a part of regulatory compliance, but it also provides valuable business benefits because it helps us to learn from the past. So even from that particular standpoint, it is very useful for us to collect the data. Now we have seen that Basel II has provided different kinds of categories. They said internal fraud, external fraud. They have mentioned employment practices and workplace safety. They created clients, products, business practices, damage to physical assets. We are talking about business disruption and system failures. And we are also bringing in the execution, delivery, and process management. So all these categories, we have understood what goes into each of these. And we are also talking about the policies and the procedures that every organization needs to come out in terms of the minimum standards or the minimum criteria for the loss data collection and come out with a methodology as to how the entire loss data can be captured. So some of the key things we have discussed there: how well the company can come out with the threshold for the mandatory collection, the minimum amount above which all the losses need to be captured. How do they calculate the gross and the net amounts? What needs to be included and what needs to be excluded? What do we mean by gains, near misses, and opportunity costs? And what is the need for capturing them? Right? We talk about recoveries. We need to capture the recoveries. The dates have to be captured appropriately. Dates and timings of the various events, legal events, the fees, etc. How do I allocate central events to the different departments? And finally, we are also talking about the action plan with respect to the mitigation activity. And sometimes, even if there is a non-financial impact, even it's better to capture even that particular aspect also. Now, we have talked about all these things. And finally, we said the robust IT system that needs to be developed. That is where all this capture can be done, either as a standalone, but it's much better to be integrated with other elements like RCSA systems, KRI systems, scenario analysis systems, capital calculation systems, etc. And so that an integrated operational risk framework can very well come into picture. All right. So that is what I really wanted to talk about: the internal loss data systems and procedures.